Hi everyone. So in this particular video, we are going to discuss about a simple forex trading strategy using USDINR currency pair. So we will look at a simple technique which can give us a very good returns just based on limited risk. So this is USDINR forex trading strategy. This is the art of taking limited risk and gaining higher returns. Well, most of the people who are trading in Indian markets, they are not taking advantage of USD INR currency pair, which is actually listed in Indian exchanges. So if you go to NSE or BSE, if you look at the currency derivative segment, there you can find a USD INR instrument, USD INR currency instrument, right? And most of the people don't know how it works, and most of the people are not taking advantage of this specific currency pair. You can really make some excellent returns based on this. Okay. So whatever I'm going to share in this particular session, this is not some kind of a hype or something. This is something you can actually test it out. All right. So whatever strategy, whatever techniques I'm going to cover in this particular session, you can directly apply it. You can implement it on your own trading. So apart from this, when you're trading in USDINR, you're going to get multiple advantages compared to other financial instruments. All right. Say most of the people usually trade in Nifty, Bank Nifty, some stock futures, options, and things like that. These are all derivatives, of course. Like when we talk about trading, we are talking about trading the derivatives. So when you're trading in these derivatives, initially you're actually taking higher risk. And of course, you're also getting higher returns, but unfortunately, there are a lot of limitations when you're trading in these type of derivatives. Like, if you're trading in index derivatives like Nifty, Bank Nifty, or when you're trading in something like stock derivatives, if you trade in some stocks like ITC or HDFC, which is listed in NSE and BSE. So what usually happens is either you'll pay a lot of capital as a margin and you don't have that much flexibility in the lot size, and also the prices. Most of the time when you look at these derivatives, right, these Nifty, Bank Nifty and stock derivatives, they're often priced to the premium. You're always buying and selling them at an unfavorable price. But compared to this, when you're looking at USDINR derivatives, which is listed in both NSE and BSE, they offer very flexible contract price. All right. You can always buy and sell them at a favorable price. They also have very less lot size, which technically means they have very, very less margin. All right. Whether you believe it or not, the minimum margin requirement to trade in USDINR is just, I guess, somewhere around 1000 to 2000. So if you want to buy one lot of USDINR futures, you just need to have like somewhere around 2000 to 3000 on your trading account. That's all. And you can do this with any broker, whether you're having an account with some, famous brokers, or whether you're having an account with some low tier brokers. It doesn't matter. Once you have a demat account, you can easily trade in this USDINR instrument. So this specific instrument can be traded with a simple trading strategy, which I'm going to cover in this particular video. All right. So being discussed about the advantages of trading in USDINR, let us talk about some actual strategies which we can implement in our own trading. All right. So right now, let me just look at the chart over here. So here I'm looking at USDINR 5-hour chart. All right. So this strategy is very simple, and this is something that you can easily implement on USDINR futures. And of course, like some of you might be interested in options, but let me tell you this, the currency futures are much better than options, because when you're trading in currency futures, all right, currency futures which are listed in NSE and BSE, you are going to put very less capital as a margin. So you can usually hold the positions. All right. You can hold the position for 2 to 3 days, or maybe, up to somewhere around 1 month, because each contract is up to 1 month and you can hold them up to 1 month. Okay. Well, right now, as I said, I'm looking at USDINR 5-hour chart. So if you look at this particular chart, I want you to focus on the price action exactly over here. So let me just mark this. Okay. So focus on the price action exactly from this particular point, the point from where I have just marked the horizontal, the vertical line. All right. And within this, hope you can notice a very congested price action over here. So if you look at the price action over here, if you look at the market movement exactly at this particular point, you can notice that the market is just going up and down, right? There is not a lot of movement. Of course, we are seeing some strong bullish candles and also we are seeing some strong bearish candles. But in terms of the momentum, in terms of the range, the prices are completely limited, right? The market is moving within a very narrow boundary. All right. So let me mark this up. Well, we can see a nice narrow range here. And every trader who have taken position within this particular narrow range are somehow struck within the market. All right. Say, for example, imagine this. If you are one of the trader, if you have taken a position over here, and guess what would have happened? Whether you are taking a long trade or whether you are taking a short trade, whether you are just buying this currency pair or whether you are just selling this currency pair, it doesn't matter. So once you have entered into the market exactly in this particular narrow range, guess what would have been the case, right? There is a nice chance your position would have struck here, right? This particular trade which you have taken here either wouldn't have hit the stop loss, neither it would have moved you towards your target, right? It would have neither touched the target, neither it would have touched the stop loss. So you are struck somewhere in the middle. All right. Not just you, there are hundreds of traders who are just like this, who may have taken positions exactly at the same spot. They might have followed some indicators, they might have followed some different trading setup or some different strategy, whatever it is. And everyone who have taken trades are likely to be struck within this particular narrow range. And that's what makes this range a very powerful trading setup. And here is another interesting thing. So we have a very strong candle. It's a strong bullish candle, right? It looks very sharp. This candle has knocked out the upper boundary of this narrow range. In other words, you can see a nice resistance here. This particular candle has broken out that specific resistance. And right after the breakout, you can see the prices continue to go up, right? The market just went up in a very nice and stealthy manner, right? You could have seen a very sharp upside movement exactly over here. Somehow, by any chance, or maybe because of some luck, if you have taken any trade over here, you might have captured a nice upside movement, a nice upside momentum over here. Well, what's going on in this particular setup? Well, the logic is very simple. So all the traders who are struck within this, especially the sellers, now when the market breaks out in the opposite direction, say for example, if you are someone who may have sold this particular asset, if you have sold USDINR, when the prices breaks out against you, what you will do is you will try to exit from the market, right? You will try to cover your position. So just like you, if there are hundreds of traders or maybe if there are thousands of traders, if they're all trying to exit at the market at the same time, their collective exit, all right, their collective exit point can cause a nice upside momentum because they're all trying to cover the position at the same time, all right. Say if hundreds of sellers are trying to cover the position at the same time, they will turn into buyers and their buying activity can clearly push the prices further in the upside direction. I think that's what happened here. So most of the people just don't understand the logic behind this, but this is what is going on, all right? The collective exit of trapped traders is what pushing the prices upside. Of course, there could be some other factors over here. Maybe there could be some fundamentals or, maybe there could be some news or some events which may have caused the prices to go up, which may have created this sharp upside candle breakout. But right after the breakout, what could have happened is all these traders, right, who are actually struck within the narrow range, they will try to exit from the market. They are trying to cut off their position. And when they're trying to cut off their position, their cut-off activity, their collective exit is what created this kind of sharp movement that you see on the price. All right. In fact, this is not just a moment. This is a completely a new trend. All right. The prices have continued to go up. So it went up all the way from here till here. That's a nice moment to capture. All right. So you can trade this specific setup. So how do we trade this particular setup? Let me explain. And here is the thing. So this particular strategy is called as narrow range trap. All right. This is something that most of the professional traders usually pay attention to. So if you are someone who have taken, if you have traded in some kind of a prop desk, or if you are someone who have some kind of actual institutional trading experience, you know that these kind of narrow range traps can create very good momentum in your direction, right? This kind of narrow range traps can create very sharp movement. And of course, if you're a retail trader, there is a very less chance you may have known about this. Okay. But this setup is something that's used by many people. Even there are a couple of quantitative trading desks, a lot of algorithmic trading desks, which usually automates this kind of trading strategy. All right. Something similar, not exactly based on price action, but something similar to this. Okay. So here is how you have to trade this particular setup. So the first thing is you need to find the narrow range. Okay. So in this case, we can see a nice narrow range over here. We just spotted that particular narrow range. And once you identify the narrow range, you need to see how the traders are trapped here. All right. So all the sellers who may have taken short position and all the buyers who are trying to capture the bottom, they're all trapped within this particular narrow range, right? So once you understand that the traders are trapped, now you need to look for a strong breakout in either one of the direction. Well, you can look for a breakout either on the upside or downside. So this is the beauty of this particular setup. Okay. So in this particular example, this breakout has taken place in the upside direction. So we can see a nice upside momentum. On the other hand, if the same breakout may have taken place on the downside, the prices might have fallen down. All right. So keep in mind, this is a bi-directional setup. Once you see this narrow range, whichever direction the prices are going to break out, you're going to take the trades in that particular direction. All right. So in this specific case, we would have taken a trade in the long side. So what I would have done is most likely, I would have taken my position exactly after this breakout candle. All right. So let me just change the color of this candle over here. Let me do it very quick. Okay. So you can see this yellow color highlight, which I have given here, right? So I may have taken the trade exactly over here, and my entry would have been exactly at this point. Maybe I would have kept the stop loss just below this narrow range, or even below this particular candle, and I would have trailed my target. So when the prices continue to go up, I would try to capture at least half of this move. Okay, I know that it's not easily possible to capture the entire upside momentum that you can see here, but at least we can capture half of this momentum move over here. All right. Once I have taken my trade here, maybe I could have captured the position until at least up to this point. Okay, you can see a nice resistance over here, right, at this particular point. Maybe I would have captured the trade until this particular point. Okay, because there is a nice resistance over here. I would have offloaded my position exactly at that point. Okay. So that's how we trade this particular strategy. Okay. And once again, this specific strategy can be used on 4-hour, 5-hour, 2-hour time frame, even on 1-day chart. But keep in mind, this is something that's specifically reserved for USDINR. All right. So if you are someone who's trying to get started in currency pairs, and if you're looking for a trading strategy for USDINR, or if you're looking for a very good instrument where you can make some decent returns with limited risk, make sure to check out this USDINR currency pair and make sure to implement this specific strategy. Of course, so when you're getting started, I don't recommend you to put all your capital at once directly into the market. So start with very small capital. When you're going to implement this strategy, take very, very small risk. Okay. Test it out. Try to take somewhere around 20 to 25 trades based on the strategy. And if the strategy feels like worth it, you can deploy your actual capital. All right. And of course, keep in mind, whatever I'm sharing here is based on my own experience. And whatever strategy is working on the market right now may fall to work in future. All right. It may not work in the future day because markets are always changing. The prices are always evolving. The market behavior gets complex each day. So we need to keep updating our knowledge. All right. So I hope you found whatever I have shared here a little valuable. If you have any doubts or any questions, leave it on the comments. I will go through it and I'll try to answer it. And if you like this video, please click on that thumbs up button. If you're new to my channel, please click on the subscribe button. So apart from this, nothing else, folks. We will catch up in the next video session. Thank you.